Good morning, everybody, and welcome to another episode of the Playbook Small Carrier Market Update. This is our opportunity to take a few minutes together. I'll go in, I'll take a look at what I'm seeing as far as the main drivers of the freight market and give you an update on what we're seeing from an analysis standpoint, and also give you a little bit of direction as we go into the following week. So typically we like to take these opportunities to look at the data over the last several days and really just do our best to come up with a reasonable forecast and a reasonable analysis to not only share with carriers, but my specific focus is to share with you as a small carrier. So that way you have some sort of roadmap or something to go by as you navigate through the week. So I want to dig right into this week's information. As you know, if you've been following this journey with us as we're going through providing you information since the beginning, I always start off with the outbound tender rejection index and why it's so important to use this as a real good barometer, if that makes a good comparison in terms of what the freight market is actually doing. If you look at the chart on the right and you see the primary thing that concerns us is a continuous decline of rejections. And these rejections are contract rejections that typically when a contract tender, or when we say tender, that means load. So when a contracted load is rejected, it goes on to the spot market, and onto the spot market, that's when it's dissipated to spot carriers. So what you're seeing on your screen now is that now we're down to only 5.4% of the loads that are actually tendered out to carriers are being spilled onto the spot market for you to have the opportunity, or if you're a load board carrier, for you to have the opportunity to be able to book and negotiate on this freight. It's just simply, just being quite frank and honest, it's not a lot out there. It's not a lot of freight out there. We're seeing rejections down in that fives, which obviously that is not ideal for us as a market perspective. They've fallen off over 3% from the beginning of the month. And what's happening now is that this gets more control to your shippers and your brokers because they have so much to choose from. And this environment itself is the lowest that we've seen since May. And that was around the time that, you remember, when we had the trade war and that back and forth stuff. Well, this is the first time that we've seen the fives in that time. If you remember June was a time where we're starting to tick up. We were seeing 6.5. Then right in the end of June, it dropped down to about 5. And then 4th of July puts us near 8. But now we're back down in the 5. So it's just a continuous downward spiral in terms of rejection indexes. And now at this point, carriers are realistically just chasing freight. They're running around chasing freight, hopping from load to load, doing the best that they can. The ones that know and the ones that see this understand why the market's moving in that direction. But tender rejections this week are very weak in terms of where we've been, and they're concerning. Now, volume itself is another opportunity for room to grow. And what I mean by that is this is not an ideal marketplace. What I'm seeing right now, and what we've seen over the last pretty good while, but specifically now, is that we see a lot of trucks, right? And not a lot of freight. And what happens in that environment is it becomes a dog eat dog world. We're in the nines now when it comes down to that freight, that outbound tender volume. Obviously, when we talk about tender volume, we just say this is load volume, right? This is a really good metric that would tell you how much freight is out there for you as a small carrier to haul, right? This is a really, really good indicator of where the market is in terms of the amount of volume of freight that's hitting the load boards at that particular time. Now, tender volume doesn't mean load board volume, but tender volume gives you an index as to how much freight overall is there. And then if you marry that with your outbound tender rejection, then that tells you in essence how much freight that you're going to see onto that load board. There is no signs in terms of sustained freight demand increase that I see. I've looked at, and you'll see some charts here in a little bit, but I looked at just about everything, and I couldn't find anything that would just stand out to say, hey, this is it. This is going to cause a quick surge in demand increase. And even when we do see a demand increase, and if we potentially see a demand increase, it reminds me of kind of like a sugar high. Nothing sustained, just really just kind of, if there's an increase, it'll be a sharp increase, but then I don't see anything sustained at this point. With the amount of capacity or the amount of available trucks right now, the markets are saturated with trucks. That's just exactly what it is. And I hate to be as simple as that is, but that's realistically what we have. We have a stagnated marketplace with way too much trucks, and everybody's fighting over the little bit of freight that's out here. This fact that we're under 10K in volume is definitely not ideal around COVID times. We're about 7 and 8. I remember seeing those. So volume itself is really truly not showing us that it's in a favorable place. When I went and pulled the National Truckload Index, you can see it in the spot market rates. They're losing steam. Down to 230 a mile on average. Mid-July, remember when you saw the rejections up and you saw volume up, you also saw rates up. Well, when rejections are down, volume's down, rates are down too. So now we're down at 230. Really kind of a stall, as we are as far as freight pricing itself. On that standpoint, we've had the downward trend now since peak mid-June. Peak mid-month of July, and we're starting to continuously see that tail off. With the diesel prices, and I'm sure you're here in a second, I think what we'll see, and we've seen it in the news in a couple of large carriers, right? So you see some carriers reporting, like Heartland Express, reporting negative margins. It'll only be a matter of time before we see another bankruptcy in that space. It'll only be a matter of time before we see more exits when it comes down to it, because diesel prices are continuously showing that rise. But it's only but so much that I think that is going to be able to take place in this particular rate environment. Went through a whole summer with really a very short peak, right? We saw a short July 4th peak, and that's really about all we saw in terms of that. Because if you look at the NTI around May, right around Memorial Day, had a little bit of a peak, not much. Right around 4th of July, had a little peak, not much. So from a sustainability, these are one of those things where you can see that it's just talking to what we can expect to see soon. When we're looking at diesel price, man, diesel price is continuously going up. We're at 381 as the average in terms of diesel fuel, up another full point, which has been in continuous climb since the beginning of June. If you really want to be technical, around Memorial Day is when we start seeing that peak. We got a little relief at the beginning of June, and then it just started tailing up. It's up over 30 cents over the last 3 weeks. And obviously, this is the things that we expect that if you get this close to $4 for carriers that are just solely the spot market, we'll see a lot of carriers as well start bowing out in the authority revocation reports that we're seeing. So if you're running on fuel surcharge, make sure that you're checking your fuel surcharge and you're getting every dime that is due to you on that. So it's super important for that.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. The people that I see most successful in this business operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the FreightWaves Playbook.
Then we go over the spot market over the last 4 days reports. I like to show you this report so that way you can get a good screenshot on what's happening in the market. What you see in the blue markets are the ones that have positive change. What you see in the red markets are ones that don't have positive change. So as you can see in your blues, you got a little bit of that Pac West, a little bit of Texas. Well, actually a lot of Texas is where we see just from a changing in overall spot rates. And then you got the Northeast. When I say Northeast, I'm talking about the upper Northeast, way up in upstate New York, that type of area. Northern New Jersey, as you go up into that Northeast, you do see some increases when it comes down to it. But look at that Southeast, man. That Southeast is really becoming a cool spot now. Obviously, if you remember just a couple of weeks ago when we were running this report, and as we were talking through this, and as we showcased this, and I showed you this last 4 or 5 weeks ago, it was the exact opposite, right? We saw Southeast was doing really well. This is really, really important. This is why you've got to stay on top of your stuff when it comes down to changes. Because if you have that mindset where you're running one lane and you're running it till the wheels fall off and you don't know that the wheels have fallen off of that lane, then you're going to be stuck. And in these type of environments, you got to stay on top of this stuff, man. So as you can see, the South was doing all right just about 3 or 4 weeks ago. Now, South ain't it. Now you've got to move and you got to change your strategies with it as well. So just make sure that you're taking this information, stay on top of that. One of the things that I would say the general theme is it's eroding. The rates are eroding everywhere as far as spread. But do what you can do. Control what you can control and position yourself in areas that you can control. Position yourself in areas that you have the best opportunity to get a better rate than average. And I would say making sure that you keep your eyes open when it comes to that. Now, as always, I want to throw the reefer information on here too. As you can see, the reefer market itself is cooling as well. It went down from over 13% on a tender rejection down to 10%. So if you remember, reefers were sitting good for pretty much most of July. Late part of June, reefers are doing okay. Now the demand is starting to tail off a little bit. Harvest season starting to slow down a little bit. So if you were running a reefer over the last couple of weeks, you weren't in as bad a shape as if you were pulling a dry box. But reefer rejection is starting to cool off too, as you can see it. And you can also see that truckload index or that reefer average, which is your reefer average. Your reefer average rate per mile right now is 257. That's coming off of a high of about 270 about earlier this month. So as you can see, man, things are just starting to cool off. The dip on a reefer is not dramatic, but it is steady. But we're starting to see this thing really, really come to a kind of cool. So next week is really going to tell the sign when it comes down to what we see over going into the Labor Day weekend. But I think that we have to be really, really mindful that this rate erosion is across all platforms so far. Through this up here, as always, I want you to see what the carrier net authority changes. And even though this is because the one thing to look at is that the FMCSA data is pretty laggard, but I just want to always bring this up so that way you have a moving target as to what we feel week to week. And when I mean we feel, I'm talking about the industry as a whole is feeling week to week in terms of sentiment. So now we're showing here that we had 27 revocations more than we had additions into the actual marketplace over last week. We're talking about 27, doesn't mean much, but that's 122% change than the last time we talked about it. Just looking at it overall, the authority growth, that flat line of authority growth, we've seen some peaks, but mostly valleys when it came to that. So we're seeing more carriers exit than we have coming into the marketplace, which in all honesty, it's not necessarily a bad thing for the market because the market has enough trucks as it is. And that's just being honest with you. That contraction, as you consider to see it, one thing I want to look at as we go in the next couple of weeks or so is obviously keep an eye on the net changes because it's going to tell you what the market looks like. And last but not least, and I always want to leave us here, imports are slowing down again, right? So imports are one of the things that really drive marketplaces. And I'm telling you, regions like LA, Savannah, and New York, New Jersey, you all going to start feeling that volume. I've already seen some tweets out there where, some of my port haulers out there saying that they're seeing some considerable changes in the marketplace. Well, this is one of the things that we actually see beforehand, right? So remember when I told you this a couple of weeks ago, this gives you a 4-6 week outlook on what you can expect as far as demand because of so much volume that the inbound ocean freight does. This is the thing that you have to keep your mind open to because when you see large swings in the opposite directions, either way, that's going to have an impact at the port. So I just want us to be really, really cautious on that. So when it comes down to it, I would expect for a trickle down impact on drayage carriers out there and then a little bit of your westbound carriers, eastbound carriers too, when it comes down to it, because the freight is just not there. So as you can see, as from today's perspective, not a lot of positives that I see in terms of freight in the freight market itself, right? I don't see a lot of things that would make us jump for joy. There are some demand concerns when it comes down to putting freight into the ports, into the transload positions. their demand concerns when it comes down to outbound tender volumes, their demand concerns when it comes down to contract carriers, how they feel. It's like, you know what, we're gonna hold on to what we got because we don't see anything that's worth our chance of chancing on over into the spot market. So might not be what you want to hear from this week's market update. However, I watch these things all day, every day. And I'll always give you a truthful market update on Mondays at 11 a.m. here. So I'm looking forward, and hopefully there's something that's different that can give us a different whim next week. You know, maybe we get a little relief on diesel pricing. Maybe all of a sudden we see tender rejection start peaking in a different direction. That is my hope, but I just want to always deliver just reality of it and just want to give you an explanation on it. So hopefully we'll see some change, and that's my hope. But as always, I want to be honest with you. So I want you to have an amazing week. Make sure that you focus on the things that you can control. Control what you can control, which is profitability, compliance, and making sure that you are trimming your expenses as much as possible. And the reason why we bring this information to you is so that you have an upper hand. So take care, and I'll see you next week.